Second question. Okay, Jess owns a printing business and has recently incurred various expenditure related to her premises. Okay, capital expenditure, revenue expenditure. Capital expenditure is the expenses and money spent on the purchase or installation or expansion of the non-current asset. That is capital expenditure. For revenue expenditure is the expenses, money spent on the day-to-day expenses. Okay, now here, build new extension to warehouse. This is the capital expenditure. Okay, other than that, okay, so here, this one they given to us. Second is that rate on new extension. Rate is a MPK licensing, all this is called rate. Okay, so this one every year you have to pay this type of licensing, so rate. So this is a revenue expenditure. Everything that you need to pay more than one time every year have to pay. This is considered day-to-day operation. Legal cost for the new extension, because this is a legal cost for the new extension, so therefore it's part of the capital expenditure. Next, repair to office room. Office is the, okay, wait, where is my mistake? Repair to the office roof. Office roof is repair going to, this is an existing, this is existing office. So that means this is an expenditure, revenue expenditure that we pay for it. Okay, now here, where is the rate? Rate of, okay, we make mistakes. Okay, here, one more. Carriage cost for roof tile for new extension. So this is also, they mentioned to you that this is a new, the cost incurred for the new extension. This is carriage inward, so it's part of the capital expenditure. So this is the answer for it. Now next, Jay's business is expanding rapidly and he need more warehouse space. Jay's can rent additional warehouse. The rent for the first 6 months would be 40,000. Alternatively, Jess also can purchase, which is 900,000. She can obtain a long-term loan of 700,000. So what is the implication? Advise Jess whether she should rent on or purchase a warehouse. Pro and con for the purchase of the, when you rent, okay, what is the benefit of the rent? Okay, here the rent for the first 6 months will be 40,000. So 6 months, 40. So this is the cost that she need to incur. So the profit will reduce. Okay. So this is a expenses increase, and then profit decrease. Okay. Now next is that here when you have rent, this is a lesser maintenance, because normally maintenance cost is included, maintenance cost, unless it's the building belong to you. Now next is that this disadvantage of it. Okay, now disadvantage. Okay, disadvantage of renting is that he will not own the asset in future. This asset can sell in future to get capital Okay, but he will not able to get it because he not own the asset. Whereas come to the if he purchase of a warehouse, what is the benefit? The benefit is he own the asset, so can sell in future, get the gain. Other than that, he need to, okay, the disadvantage. Okay, now I thought disadvantage because it's the amount is got high. Okay, the disadvantage that he has to pay loan and loan interest on time. Okay, to avoid the bank take the asset. Okay, so this is one of the problem, and also that he has to maintain the warehouse. So this is a maintenance cost increase. Okay, and also is that how that can be. This okay. We talk about one more advantage. He can sublet to other tenant to earn some income from rental. So this is advantage. So now we make it into, let's see, 5 mark. Okay, here we will say that the advantage of renting a warehouse is Jace does not need to pay a lump sum of 200,000, which may affect its cash flow. So this is a information that we can talk about. And next is that he need to pay 6 months rental in advance. We need to pay 6 months rental. The rental, the 6 month rental, the 6 month rental is much cheaper compared to cash to pay out immediately. Okay. Moreover, he does not need to incur maintenance costs since he just renting the warehouse. So this will save some money for him. Okay, so this is the information that you can talk. But disadvantage, however, you will not own the asset even after, if even asset after many years pay for the rent. So this is a disadvantage. Okay, now come to the purchase. By purchase of a warehouse, the asset belong to him. The installment fully pay off. Okay, so this is the advantage of it. He need this asset. Okay, we talk about advantage first. This asset can be sold in future and earn capital gain of the disposal of warehouse. So this advantage. So disadvantage. Okay, what's the disadvantage? He has to raise 200,000 cash to pay the down payment, which could be a big amount to him. Okay. The cash flow may be affected. Okay. He has to ensure monthly repayment of loan and loan interest served on time to avoid the bank take the asset. Okay, so now the conclusion. Okay, what is the conclusion that we can put in? Make one sentence or two sentences for it. Okay, the next one, the conclusion. For me, I not agree. I would suggest this rent a warehouse to keep his inventory, because he does not need to take up huge amount immediately. So this is an advantage. He may also does not need the warehouse in future. Okay, so provided the business not doing well. Okay. So that's the answer that I give. I not agree on it. So you can choose agree, up to you. Okay, now, and this is the what question? Okay, this is a depreciation topic. Okay. Here an extract from the J's statement of financial position. At 31st December 2019. So cost, accumulate net book value. During the year, the following transaction took place. On 1st Jan 2020, feature 30,000 were purchased by check. 30th June, feature was sold, which was received by check, which was this 6,000 by check. This feature has original purchase on the 1st 2018, 20,000. Just depreciate feature on the straight line basis. She assumed feature will have a useful life of 4 years, at which time the residual value will be 10% of the original cost. Depreciation is charged in each part of the year for which feature is owned. So this one, we need to be careful when we calculate the disposal asset. Okay, they asked to prepare the feature account. Okay, now let's put into here. Okay, beginning year we have this one. Okay, 2020, because the question is asking prepare the 1 year only. Okay, for the year ended 31st December. Okay, so 1 year account. So beginning year will be January 2001. Okay, purchase of the new asset, which is fall into the first day. So this one by check means bank account, 30,000. During the year, there is a disposal of the asset, which is happened on the 2020 June 30th. So this is a disposal asset, disposal of feature account. Okay, the amount is, what is the cost? The purchase price is 20,000. Okay, now no more. So we can calculate the balance carried out first. Balance carried out. Okay, take this minus this 125 here 2021 January 1st. Okay, balance brought down. Remember balance carried down. This all must be complete. Okay, now the next one, we asked to prepare the provision for depreciation. So they given this one opening. Now we need to calculate this one disposal. So how many months consider disposal amount for 2020? We dispose on June 30th, which is the 6th month. So this is a disposal of feature. So how much the disposal amount? So we have to count for the amount, which is 20,000 purchased on the 1st January 2018. So January 18. So how many years? Let me put in the information here first. So 2018, 1 year. 2019, another year. 2020, this one is only 6 months. So 6 months means that 6/12. Okay, this is a 6/12. Let me put in the 20, 6 months. So how are we going to calculate the depreciation? So the depreciation saying that straight line method, useful life 4 years, and residual value is 10%. So we need to take 20,000, okay, minus the residual amount, 20,000 times 10%. Okay, this is a total residual amount, which is 2,000. So 20,000 minus 2,000 is 18,000. And divide by how many years? 4 years. But how many years we have to times? 1 year, 2 year, and half year. So 2.5, 2.5 year. So we get the depreciation, accumulated depreciation for disposal is 11250. So now next, we need to calculate the depreciation. Depreciation is charged for the each part of the year for which the feature are owned. So when we calculate in here, so this one will be, you need to be careful because here you have three types of the asset. So in December, when I calculate my depreciation, okay, this depreciation will go to the income statement. So first you have old asset. So this old asset is how much? The old asset is, let me put in 11500 minus 20,000. Okay, this is the old asset that we have. Okay, so then we get the amount is, let's see, let me count, equal 11500 minus 20,000. So this is the old asset, and then the new asset 30,000. Okay, and then disposal asset 20,000. So this one, what we're going to do is we take 95,000. Okay, 95,000 minus 95,000 times 10%. And then after that, we divide 4. So this is the amount that we get. Second is that 30,000, okay, minus 10% for the residue value, 10%. And then after that, divide by 4. So this is another one. Here is 20,000 minus 20,000 times 10 divide by 4. But because we only use for 6 months, so divide by 6 over, divide by 2 actually. So now we calculate the total amount. So here 95,000 minus 9,500 divide by 4. So we get this amount. So here we get, let me put in first, 21375. And then the next one, 30,000 minus 3,000. So we divide by 4. So we get, let me put in again. Okay, this one is 6,750. Okay, the next one will be 20,000 minus 2,000 divided by 4. So this divided by 4, we still have to times 6 over 12. So this one is 2250. So total amount add together 21675 plus 6750 plus 2250. So this is the total depreciation charge for the year. So now we add the total amount. Okay. So here, December 31st, balance carried out. So take this minus this amount. So this is the total balance carried out. So 2021, January 1st. So remember to read the instruction in the question, what they want us to do. Okay, the next one is they ask to prepare disposal. Okay, disposal account. Let's prepare disposal account. Okay, the cost, this amount had to transfer to the disposal. So 2020, June 30th, okay, feature 20,000. And then the accumulated depreciation, which is the provision for depreciation. So we get this one, and the amount disposed get 6,000 received by check. So this is the bank account, 6,000. Okay, now we calculate which side is more, which side is less. So debit is more. So in this case, we have loss on disposal. So statement, income statement in the credit side. So this loss will transfer to the income statement. So this one, this income statement amount, the date we put 31st, the last day of the month, last day of the year. Okay, now let's move on. Okay, that's all for this question. For the second question, now we continue.